Here it is, OXY Petroleum Corp. Really, look, excuse me, not that, but it's the leader in its sector. In the sector that it's in, once again, it's in the DXE, where fund managers get paid on yield and they get paid on great movements. Now, listen, we've always loved it. We've traded it from day one. In 2010, we put them lows. We were all over that. And we got up here, and now one thing about this Oxy, it prices in recessions. And you're right back down here where back in 2010, they did QE2 here, and these things went up. QE3, I already read it with MMTs and about what that's going to be like. But you're falling through the 200-week moving average right here, and you're selling down. And people were heavily on margin in these names, and they got taken out. And that 200-week moving average is at 78.53. Okay? The 10-week moving average, which crossed over that 100-week, that 10-week moving average at 86.1, and we're well below the 10-week. And they're very bear trend weekly charts that they're in. But this is a leadership that at some point we're going to get totally oversold here, and the percent DS is at 11. When the percent DS was up here at 64, you were getting overbought in these kind of names, 69. And you can tell that it'll take some work. They're buyable on the bottom up days on intraday levels and investment levels at certain points. That's the major weekly support level. We broke it slightly on Friday. That's this weekly area that we have. It's 2010 right here. I'm sorry, it busted it and came down to that level. The thing about it is it's oversold. And once the seller clears out of the way, if we break this trend line, is a very, 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 very major support line that goes clear back over here to 316 of 2008, where it put its high and its all-time low reversals in 2008, where it really priced in the doom and gloom, recessions and depressions and whatnot. And I can tell you one thing, MMTs, on this Oxy, when I blow up this part of the chart now, you can see where these trend lines are below here in this weekly area right over here. That's going to be a major area in here, right here, right about there. And the thing about it is, we start fooling around and they sell these things. Remember, they're already oversold. So here's the critical area that in 2009, when we broke out and finally broke this downtrend over here, we did it at this trend line right there, right here. And we got up there and we held up there, and we're testing that. And that was a major resistance breakout. You went through that resistance. That was wonderful. But now you're testing it. And the thing of it is, if we fall through, we're going to get more oversold. That's what it looks like on a weekly. And I gave those numbers out. Okay? And that Oxy is definitely in trouble. And the 2010 lows that are on that weekly are way down here. Another 12 handles is where it all started, right here, down here on this daily. And if we're at that trend line right here, and if we break it, we're going to come down in here where those gaps are, okay, potentially. But in your platform, you'll know, and your MMT platform will guide you in it, because you can currently see right here, that we're at 19.86% on this daily chart. And we're at the critical levels. We'll set alarms and alerts, okay? And the current moving averages, the 10 is 79 and the 20-day is 81. So we're closing well below them here, and we're at critical mass support levels, make or break on OXY. But they're going to be on sale, and they price in recessions before recessions happen.